I've got a serious question for you. Who in the world does not like getting a paycheck for doing nothing? Well, clearly somebody who's not in this world.
Hear ye, fellow Celestians, we've abducted a humanoid finance genius. So, he gets paid money for doing absolutely nothing.
Well, C577X62, the humanoid species has found a way to make their money work for them by investing it into something called dividend stocks.
I understand this here Joshua Mayo
That's me.
is teaching the humanoids how to do this so-called investing for dividends.
Yeah, I am. And it's pronounced dividends. And I could teach you too if you wanted. You just have to, let me go first.
Oh no, we'd much rather probe your mind and dissect the infinite amount of knowledge in your human cranium.
I'm gonna say no to that. I don't like the way that sounds. But hey, if you let me go, then I could just show you a video instead and you could, learn that way.
The probing does sound much more fun, but fine, a video works too.
I'd like to start out by first answering the very important question, is passive dividend income actually passive, and does it work? It seems too good to be true. You go and you buy a dividend paying stock or ETF and then it starts paying you money? Is it really that easy? The answer is yes. It is that easy, and that's the reason why dividend investments are so popular, because it's some of the easiest money you will ever make aside from winning the lottery. By simply owning shares of a monthly dividend-paying stock or ETF, you can be assured that you will receive a paycheck every single month. Now, I know, I can already hear people in the comments saying, this guy doesn't know what he's talking about. Dividends are not guaranteed. A company can choose to cut them whenever they want if they so choose, you idiot. Oh, I need a sip of milk with ice in it and a side of cucumber garnish. And while this is true, a company can cut their dividends at any point. This most recently happened with Disney, who for 40 years paid and raised its dividends until they were cut in 2020. This is where dividend ETFs become very useful, because when you invest into a dividend ETF, you are virtually guaranteed a paycheck because the ETF will only invest in companies that pay a dividend. And so the moment a company cuts its dividends, like in the case with Disney, that company will no longer be held inside of the dividend ETF. Now, of course, in the extremely rare case that an ETF closes, then technically yes, a dividend ETF's dividends are not guaranteed either, but you get the point. Okay, so if you're looking to invest your money to earn monthly passive dividend income, what exactly should you be looking for in a dividend stock or ETF? In other words, how exactly do you know what will be a good investment and will guarantee you a monthly paycheck? If you start investing for monthly passive dividend income, but you don't actually know what you're looking for, you could end up losing a lot of money. And so it's gonna be critical that you pay very close attention to what we're about to talk about. The most common way to sort of measure a dividend stock or ETF's worthiness is by looking at the dividend yield. The dividend yield is a number that tells you the percentage of a company's stock price that it pays out in dividends each year. Now, what a lot of investors will do, which is a massive mistake, is go and invest into dividend stocks or ETFs that have extremely high dividend yields. For example, NLY is a very popular REIT that's known for having an outrageously high dividend yield. Currently, the yield is sitting at a 12.17%. This is good, right? Because a higher dividend yield means a higher dividend payment, which means more money in your bank account each month. Yes and no. It depends on a lot of different factors. Now, in the case of NLY, the high dividend yield is actually pretty misleading, and I'll show you why. So NLY has a dividend yield of 12.17%. And by doing some really quick research, I can see that NLY has been paying a dividend of 22 cents per share every quarter for about a year now, or about 88 cents per year. This means for every share of NLY that you own, you'll get a paycheck for about 88 cents per year. And considering that one share of NLY is only gonna cost you about $7 to invest in, that's not bad, right? Let's compare NLY to another popular dividend ETF, something like SCHD or the Schwab US Dividend Equity ETF. SCHD has a dividend yield of 2.83%, which is tiny compared to NLY's 12.17%. SCHD also costs 10 times as much as NLY at about $79 per share compared to NLY's $7 per share. So why would anybody want to invest in SCHD when it costs 10 times as much and the dividend yield is significantly lower, when they could easily invest in something like NLY, buy more shares, and get a higher dividend yield. This is where things start to get very tricky, and it's the reason why you need to be paying very close attention. Yes, it's true, SCHD does cost more and it also has a lower dividend yield. But let's go in and break these numbers down even more to see which one would actually make you more money. Let's say, for example, that you have $1,000 to invest and you either have to invest in NLY or SCHD. As you can see, NLY is currently trading for about $7.25 per share, and SCHD is trading at about $79 per share. With $1,000, you'd be able to buy about 139 shares of NLY by dividing 1,000 by the current price of $7.25, and you would only be able to buy about 12.65 shares of SCHD by dividing 1,000 by the current price of $79 per share. So $1,000 bought you 139 shares of NLY, and if you recall from earlier, NLY pays an annual dividend of about 88 cents per share. This means with 139 shares of NLY, you would earn about $122.32 per year in dividends. So let's take a look at SCHD now. $1,000 invested into SCHD would give you 12.65 shares. If we multiply 12.65 by $2.25, which is how much SCHD pays in dividends every year, this means you'd only earn about $28.50 per year by investing $1,000 into SCHD. Now, full stop. I know technically you are earning more dividends per share with NLY than you are with SCHD, but this is where the deception begins. And it's the reason why you can't just look at the dividend yield when deciding which dividend ETFs or stocks to invest in. Because even if you are just solely investing for monthly passive dividend income, the last thing you want is your portfolio declining in value over time. So if we look at the 10-year performance of both SCHD and NLY, you'll very quickly see why that high dividend yield that NLY offers is very misleading. If you would have invested $10,000 into NLY 10 years ago at about $16.14 per share, you would have lost over 55% of your original $10,000 investment, because today NLY is only trading for around $7. But at least I'm still getting paid the high dividend yield. Psh, you don't know what you're talking about, Mr. Mayo. What kind of a last name is that anyways? Mayo. Ugh. Yuck. Oh, of course, the dividend. So if we look back several years to the year 2013, we can see that the dividend payments were actually higher back then than they are now, which means that they've actually been declining over the years instead of going up. And so not only is your original principal investment losing value fast, but you're also getting paid smaller dividends as the years go on. Now, on the contrary, if you would have invested $10,000 into SCHD 10 years ago, your investment would have grown to over $40,637 by this point. And on top of that, the dividend payments have also been increasing consistently for the past several years. So, out of these two investments, which one do you think is the better investment? SCHD is by far the superior investment, even though it has a lower dividend yield and it costs more money. And this right here is why it is critical that you do research on every single one of the investments that you want to put your money into. Because a stock like NLY can seem promising from the outside, but it's actually a dividend trap that should be avoided at all costs. So you may be wondering, well, which ETFs or stocks should I invest in to get paid the most money? Well, fortunately, I've compiled a list of what I believe to be the absolute best dividend paying stocks and ETFs. But first, how exactly do you find the best monthly dividend stocks or ETFs? Because if you give a man a fish, then he'll eat for a day. But if you teach him how to fish, then he'll eat the rest of his life. Unless, of course, he doesn't have a fishing rod, in which case he's screwed. So this is why it'll be important that you know exactly how to find the best dividend investments for yourself. Here's what I want you to do, okay? So you're gonna head over to this website here, ETFDB.com. If you've been watching my videos for any amount of time, then you'll know how much I love this website. If you don't know what it is, it's basically a free tool that you can use to research and screen the best ETFs to invest in depending on your strategy. And yes, I am only going to focus on dividend ETFs and not dividend stocks. Why? Well, because I'm biased, and most dividend stocks that you invest in will likely already be included inside of most of the good dividend ETFs anyways. And so you might as well invest in a dividend ETF for the added diversification. And no, that's not financial advice. She's watching. Anyways, from the homepage here, you're gonna click right here where it says ETF Screener, where you'll see a sidebar with filters and a table to the right. What I want you to do is click right here on the sidebar where it says Expenses and Dividends, and then filter the table by a specific dividend yield range. Let's say closer to about 3%, and I don't want any dividends with super high dividend yields because those are likely gonna be dividend traps. And so the max dividend yield range that I wanna focus on is about maybe 9%. And that's probably still even too high, but that's fine. Now, you'll notice a few different columns on this table. The ticker symbol, which is what you would type into your broker's trading window to find that ETF. The annual dividend rate, which is how much the ETF pays in dividends each year. The dividend frequency, which shows how often the dividend is paid. Is it paid every year, every quarter, every month? And so if you only wanted to invest in monthly dividend ETFs, you would check this column here to make sure that the ETF that you're interested in is actually a monthly dividend. And then the last column that you want to focus on is the actual dividend yield, which is the one that I'm going to pay attention to the most. So I'm looking at the table here, and I'm just trying to see if I can find a dividend yield that I like, as well as a dividend frequency. And so since I know that I only want to invest in monthly dividends, then I want to make sure that I'm actually paying attention to that column as well, in addition to the dividend yield. I'm also looking at the name of the ETF because some of these are going to be bond ETFs, which I personally don't want to invest in. So, okay, KBWD, the Invesco KBW High Dividend Yield Financial ETF. This is a monthly dividend with a 6.69% dividend yield. Now, if you recall from earlier, I just want to quickly glance over at the chart for this ETF just to kind of get a quick idea of how well it's performed over the past 10 years. Because the last thing you want to invest in is an ETF with a high dividend yield that's losing value over time. So I'm going to open up Google Finance, and I prefer Google Finance because it's very clean, which I like, but you can use Yahoo Finance or anything that you want to view the charts for different stocks and ETFs. So I'm going to type in KBWD, which is the ticker symbol for this ETF, and it pulls up the chart. So as you can see, it's not terrible. It's definitely not gaining value, but it's also not losing a lot of value either. Obviously, it had this nasty drop here in 2020 because of the pandemic, but the entire market dipped, and so I'm not really too concerned about that. Overall, though, prior to that dip in 2020, it was consolidating pretty much sideways, which isn't bad, especially if you're investing primarily for passive income. What you don't want is something that's going down a lot over the years. So let's head over to a resource that I like to use to search for different dividend information, and that is nasdaq.com. And I'm going to type in KBWD into the search field here, and then I'm going to click on dividend history on the side over here. And as you can see, this ETF pays an annual dividend of $1.64. And so let's use the example from earlier and say that you invested $1,000 into this ETF. And so $1,000 divided by the current price of this ETF, which is $19.34, equals 51.7 shares of this ETF. Then I'm going to multiply 51.7 by the annual dividend of $1.64, and that gives us $84.84, which is how much you would earn in dividends every single year if you invested $1,000 into this ETF. Not bad, but let's keep on looking, let's keep on researching, because I feel like we can probably find something even better. So I'm going to head back to ETFDB.com, and I'm actually going to filter by the annual dividend rate instead of the dividend yield. Okay, so here's some pretty familiar ETFs. You've got VNQ, or the Vanguard Real Estate ETF, but I'm looking for a monthly dividend ETF, which this is not, so I'm going to keep on scanning. Here's a monthly DHS. I'm familiar with that one. I believe that was actually in my top 6 monthly dividend ETFs video. Okay, so it's saying that DHS pays an annual dividend of $3.05. So I'm going to go back to Google Finance. I'm going to type in DHS so that I can see the chart. And okay, so this is looking pretty good so far. So not only does this ETF pay a high monthly dividend, but if you would have invested into this ETF 10 years ago, your original investment would be up close to 100% by now. So let's go ahead and do our equation again. So $1,000 invested divided by the current price of DHS, which is $86.61, would buy us 11.5 shares of this ETF. And 11.5 shares times the annual dividend of $3.05 equals $35.10. Definitely lower than the previous ETF that we looked at, KBWD, which paid us more than double that money. But like I keep reiterating, it's important to consider the long-term effects of your investments as well. With DHS, your original investment would be growing over time, whereas with KBWD, your investment would be basically going sideways and potentially even losing a little bit of value over time. And that's something that you really have to consider for yourself. Because if you're investing purely for passive monthly dividend income, then perhaps you're okay with sacrificing a tiny bit of growth for a much higher monthly dividend paycheck. Now, if you're like, Joshua, That's too much work. Just tell me what the best dividend stocks and ETFs are to invest in without me having to go and do all the research myself. I will, I promise. It's coming up very soon, just hang with me. First, I want to discuss with you this very important question. How long do you have to own a dividend stock or ETF before you can get the dividend? Because some people think, well, why not just buy the dividend stock or ETF right before the dividend payment and then sell it after you get your paycheck? Well, it's because you actually have to own the dividend stock or ETF for a certain period to then be eligible for the dividend payment. Here's how it works. When it comes to getting paid dividends, there are 4 dates that you must know: the declaration date, the ex-dividend date or the X date, the record date or the date of record, and then the actual payment date. The declaration date is the day that the company announces that they're going to be paying a dividend. Typically, this announcement will include the size of the dividend, the record date, and then the actual payment date. Next up, you've got the ex-dividend date, which is the cutoff date. If you want to receive the dividend, then you have to own the stock or ETF before this date. If you buy the stock or ETF on or after the ex-dividend date, then you will not receive a dividend. Also, just keep this in mind, the ex-dividend date is typically 1 day prior to the record date. The record date is the day that the company checks its books to see which shareholders are entitled to a dividend. Only the investors who own the stock or ETF before the ex-dividend date will be entitled to a dividend paycheck. And then finally, the payment date is the actual day that you will receive your dividend paycheck. So just as an example, let's say that you wanted to invest in Verizon so that you could get paid that dividend. Verizon announces on the declaration date that they will be paying a dividend. They mention that the record date will be June 15th and the actual payment date will be June 29th. Now, you know, because you've been watching Joshua Mayo's videos on YouTube, that the ex-dividend date is 1 day prior to the record date. And so if the record date is June 15th, then the ex-dividend date is June 14th, 1 day before June 15th. And so if you wanted to get paid a dividend by Verizon, when would you need to buy the stock? If you said June 13th, then you are correct. Because remember, you need to own the stock or ETF before the ex-dividend date to be entitled a dividend payment. And so you could literally buy Verizon stock 1 second before the market closed on June 13th before June 14th and you would still be entitled a dividend payment. But the moment June 14th hits and anytime after, you will not be entitled a dividend payment on June 29th, which is the actual payment date. Now, I just want to say this to make it very clear. Buying a dividend stock or ETF 1 day before the ex-dividend date and then selling it after you get paid your dividend is not a winning strategy. The problem with doing this is that typically when a stock or ETF pays a dividend, the price per share of that stock or ETF will typically fall by an amount corresponding to the actual dividends that were paid. And so if you were to sell the stock right after getting the dividend payment, then you're essentially breaking even. Now, of course, this loss in value is not permanent. The stock will continue to move forward, and long-term investors of the stock or ETF will continue to build their portfolios larger and larger because of compound interest. Now it's time to reveal that juicy list of the best dividend stocks and ETFs to invest in. I've separated the list into several different parts: the best monthly dividend ETFs, the best growth ETFs, the best high dividend yield ETFs, the best monthly dividend stocks, and the best non-monthly dividend stocks. Okay, that's all I've got for you beautiful people today. Hey, if you have not already dropped a like down below for the YT algo, please do that. Also remember to subscribe to the channel if you like content like this. Follow me on Instagram at RealJoshuaMayo, and as always, I will see you again very soon. Take care.